Greetings, members, one and all of the Salivation Nation. Gold futures logged the largest weekly loss in more than 8 years as a headline from MarketWatch. But we're going to take a look at the general market and what has happened here, especially today, in the last day or so, and how this has to do with the coronavirus and with precious metals and the demand. All of it together in this video. Let's explore! Yes, I just posted a video about the U.S. Mint selling out of American Silver Eagle bullion coins temporarily. But we're going to talk just about precious metals in general here in this video and their loss here and what it could mean for the future. And in tomorrow's video, we'll kind of talk a little bit more about, the cycle of, more specifically silver, but you'll get an idea from that. But gold futures ended sharply lower for a fourth straight session on Friday with a loss of more than 9% for the week, the largest since September of 2011. Volatility shocked investors looked for news on fiscal stimulus packages from governments around the world to help ease the economic pain of the COVID-19 epidemic that has ground some of the world's business activity to a halt and rocked financial markets. You've heard me say how more and more items, more and more events are being canceled, everything from churches to work from home to concerts to coin shows, everything. A lot of things are being canceled, in some cases for quite a while. It seems that investors have been selling gold in order to cover losses elsewhere, said Caroline Bain, chief commodities economist at Capital Economics, in a Friday research note. Ample liquidity in the gold market means that the sale of gold holdings is a relatively quick and seamless way to raise cash in times of need. And so this is the point, and also you could translate some of this to silver as well, especially from the ETFs markets, is that the precious metals are doing what they do. They are there, and if in times of need, if you need them in a case of emergency, in this case there's been a lot of sell-off because people feel like they need cash. Cash is the ultimate liquid asset, for sure. Even more so than gold and silver. In fact, people talk about saving in gold and silver because gold and silver aren't as easily liquidated. Gold for April delivery, the article from MarketWatch continues, was down negative 4.4% on the COMEX, fell $73.60. We'll take a look at these prices here momentarily. Prices for the metal based on the most active contract ended at their lowest level year to date, according to FactSet data. Gold futures saw a weekly loss of 9.3%, the biggest percentage decline since the period ending on September the 23rd, 2011. May silver dropped $1.50 or 9.4% to end at $14.50 an ounce after the market tumbled 4.6% in the previous session. A settlement around this level would be the lowest, most active contract since May of last year. For the week, silver lost 16%. Man, it got smacked down hard. And then we'll talk about the American Silver Eagles. It says that March exceeds 300%. We went through all those numbers before. This is from data from the mint itself. It's a low double whammy for low production and sudden spike in demand. This is from American Gold Exchange, the Dana Samuelson. And it's I'm not convinced that buyers are rushing in because the price dropped. This is a fear-driven surge in demand. And I talked about that in the prior video. There's two ways to buy precious metals, or really there's two ways to buy anything. You buy it out of opportunity or out of fear. This is what we're talking about, fear, and that's not the healthy way to do it. That means that people will be sorely disappointed if the price doesn't recover, if it doesn't see any net gain or a return on their investment in this particular case. And then we talk about the aid package and financial and what Congress is going to do, what the government's going to do in terms of COVID-19. House Speaker Nancy Pelosi said she and President Donald Trump were near an agreement on an aid package to help address the health emergency that is created by the infectious disease that was first identified in Wuhan in December and has infected about 128,000 people worldwide. Pelosi said the White House will pass a coronavirus bill. The House will pass a coronavirus bill aimed at helping families. And Donald Trump has just announced, as of the recording of this video, a state of emergency, which basically is a blank check where monies can be allocated to help very quickly in times of areas hurt by the economic impacts of this ailment here. And the Dow is up 9.36%. It's good to see these green numbers for once in a while, but this suffered the biggest one-day plunge since the October 1987 crash. The U.S. dollar also strengthened, with the ICE U.S. dollar index up 1.133%. 1.3% as gold futures settled, looking at a gain for the week. Gold has declined this week, even though markets remain volatile, as the metal's natural opposition to the U.S. dollar has been restored. And for the short term, said Colin Szynski, chief market strategist at SIA Wealth Management. The plunge in Thursday Treasury yields a week ago depressed the U.S. dollar and boosted gold, but now that the panic rush into bonds has eased a bit, the U.S. dollar has rebounded against gold and other currencies and the euro, and gold has dropped back, he told MarketWatch. Taking a look at the bigger picture for gold, George Milling Stanley, a chief gold strategist and State Street Global Advisor, said some investors were also reluctant in part to part with their equities at depressed prices and were able to sell gold in order to meet the margin calls, prompting the recent declines in price. This is exactly the same as what happened a week and a half ago before the emergency rate cut from the Federal Reserve, and the equities dropped dramatically in 2008, 2001, 1987, etc. He told MarketWatch. In all of these previous cases, investors were able to take advantage of gold's liquidity to meet margin calls, and the gold price quickly recovered within days or weeks. That is what I'm expecting to occur this time around, and it very well could, and do it before silver does. Because let's pause and take a look here at the markets. Look at where gold is. Yes, it took a pretty big hit, but it is still up above the time where it was. It didn't hit as hard as silver was. In other words, gold has held on to its own, even though it's dropped dramatically. And by the way, it's kind of recovering some of those losses as we speak here. But even as such, it wasn't that long ago where $1,500 seemed pretty high for gold. So gold is doing what it does. Gold is the ultimate wealth preserver, in my view. It is the ultimate safe haven. Silver is more volatile. It's taken much more, it's been beaten down much harder, in my view. It has, than gold. Palladium has taken a really big plunge here as well below $2,000 an ounce, below $1,900 an ounce. It's crazy seeing where it's going. Let's see. Copper fell by 0.3% to $2.46 a pound for the lowest most active contract settlement since November 2016. It lost about 3.8% of the week. Somewhat a similar story as what we've seen with silver, which means that silver's price action loss is somewhat acting as a commodity. So it is interesting to see how things are moving in the precious metals world here as of late, especially here today. We're seeing these plunges. But I think there is the chance that gold could recover some of these losses and trade back closer to that $1,600 level. We shall see. What is normal now for gold or silver? But, people are talking about, this upside down world where the market goes up and precious metals go down, the market goes down and precious metals go down. It is a lopsided world we live in, at least here, especially with this Black Swan event upon us. We'll see how it all pans out from here, but nonetheless, all the metals have taken a beating today, really, except for platinum, but it took a pretty big hit yesterday for sure. and it's still down. Don't let that green number fool you there. We'll see how all this plays out. And remember, just as quickly as they snap, as they plunge down, they could snap right back up again. And it wouldn't surprise me if both or if all the metals did shoot back up again. It's anybody's guess, because in a fear-driven market, anything's possible. Rationality is out the window. We'll see how it plays out. In the end, I think that we, as precious metals, as holders of these metals, we should not panic or buy out of fear. We should buy out of opportunity, and only as such that our wallets will allow. Be fiscally responsible in everything, and don't let the allure of low prices drive your spending to the point of being unwise. There you have it. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.